The coronavirus pandemic has plunged renters and landlords into an uncertain future. Many Australians who have lost their jobs are struggling to pay the bills as state governments unveil packages to try and support those under stress. We are joined by Nerida Conisbee, Chief Economist at REA Group, and there's no winners in all of this. Nerida, of course, those renting under stress, many landlords who are investing for their future under stress as well.
Yeah, look, there is a lot of stress. I mean, we had that 6-month ban on evictions announced a couple of weeks ago now. State governments have been left to sort it out, and we have seen a range of packages announced. So Victoria is the most generous. They've announced a $500 million package. It does include some money that will become available to renters, land tax concessions, those sorts of things. New South Wales is roughly similar, a little bit less, $440 million. But they don't include any cash for renters, but they do include land tax concessions. The one that does seem to be giving the most angst at the moment is the Queensland announcement. And the big issue there is, I think, around rental repayment. So New South Wales, if you don't pay rent because of COVID-19, you do have to at some stage pay that rent back. But in Queensland, there is no requirement to pay that rent back.
Yeah, it's a bit like the education system. It's different everywhere, isn't it? And it's hard to find an answer. Originally, the federal government came out and basically said we'd like the landlords and those renting their properties to work on this together. And I think in the main, like you would think from stories I'm hearing that people have done that quite well, but then there is a gap of those that are behaving poorly on both sides.
Yeah, I think you're right. You know, I think in the end it is up to the landlord and the tenant to work it out. And we do find that landlords and tenants that do have a good relationship typically are a lot happier overall. So it is breaking down in those situations. I think where people are very much under stress, I mean, in some parts of Australia at the moment we are seeing very high vacancies. We're starting to see quite significant drops in rent. So a lot of discussion has been around pricing and what will happen to house prices, but at the moment the really big hit has been on rental levels.
What about rural environments? Because with borders shut and travel internationally, it looks like it's not going to be anywhere on the foreseeable future. We'll see a lot more people go to rural areas. What about the property market?
Yeah, I mean, it's been interesting. We've been having a look at high levels of inquiry in a lot of rural areas, and it's quite mixed. I mean, we're seeing Wollongong topping the list at the moment, probably driven more around affordability in Sydney, I think, rather than COVID-19. But places like Orange, we've seen a really big pickup in inquiry level. We've seen a pickup in places as diverse as Mildura and Wodonga as well. So not exactly sure what's driving it. It may just be people just having a look around and getting sick of their cramped homes in capital cities at the moment with a lot of people in lockdown, or, you know, it could perhaps be people looking for holiday homes around Australia. We are seeing some places pop up a lot. Byron Bay, for example, Berry has come up on the list, and, you know, they're not exactly affordable locations, but they are beautiful holiday destinations. And with many people not being able to travel, or with no one really being able to travel overseas now for quite some time, in all likelihood, a lot of us will be holidaying at home for the foreseeable future.
The rhetoric, understandably, is cautious in and around the pandemic, but there is some sort of thought process now starting to happen in Australia anyway, that we can start to see where we may turn a corner, or vaguely. What about the property market? Because at the start of the year, Sydney and Melbourne in particular was booming.
Yeah, it is interesting. I mean, when we have a look at March pricing data, we can still see that boom coming through in terms of price growth. So at the moment, house price data isn't really showing anything much in terms of an impact. It will be interesting to see what the outlook is. I mean, at this stage, the 6-month mortgage payment freezes do seem to be helping. We're not seeing high levels of distressed selling. As I've mentioned quite a lot recently, the big issue around at the moment is around rental markets. So anywhere where we're seeing very, very high proportions of rental housing, anywhere where there are very similar apartments available to people, they're the areas we think will potentially come under the most stress. In terms of the areas that do seem to be holding up, we're still seeing very, very high demand for premium suburbs in Melbourne and Sydney. Also, middle suburban areas where, you know, you can get a big home on a big block. So we're not really seeing a big shift in that demand. The areas we are seeing a bit of a shift in demand are anywhere that's a really strong, very high proportions of rental properties.
Nerida, you just mentioned the 6 months where people may not have to pay their mortgage back. It is important, though, isn't it, from your perspective as an economist, for people at home to realise they need to look at this very, very closely, because they will have to pay it back afterwards. So if they can avoid it, it's probably best that they do. And even those sort of dipping into super, because super funds right at the moment, the money there is, you know, it could be up 100% in 8 months' time. So the interest rate isn't real good.
Yeah, look, you do need to be really careful. You know, I think on one hand, it does look very attractive. Obviously it looks attractive to a lot of us that we don't have to pay our mortgages for 6 months if we are impacted. But at some stage, you do need to pay that back. The other issue too, as you said, is around superannuation, that it's not a good idea to dip into your super, primarily because it is your retirement fund. If you're quite young and you're dipping into your future, that money could be worth, much more than it would be worth now. So you do need to be careful and think long term, that this is a short-term crisis. Ideally, it will be largely over within 6 months, and you don't want to really dip into your savings or take on extra debt at this stage.
Yeah, it's great advice, Nerida. And just quickly, there are other ways, aren't there, to try and get money without having to go to these extreme lengths, particularly if you do have a property and you have some equity, to talk to the bank at very low interest rates.
Yeah, the banks are being really good at the moment. And, I think we have to remember we're not in a financial crisis, and it is very different to what we were seeing last year, when we had the Financial Services Royal Commission, when there was a real lockdown on lending. Very different from the GFC, the global financial crisis, where it was hard to renegotiate payments on debt. And very different from the 1990s recession. So it is quite an unusual downturn in that the banking system at this stage is still really solid, and they are open for business. We are hearing that the CEOs are adamant that, they're open for business, they're lending, and a lot of them are really open to people renegotiating terms on loans. Yeah, and we're going to need to see people spending money, aren't we, to get the economy going again. Nerida, you're always a wonderful font of information. Have a great weekend. We'll catch you next weekend. See you then.